Ti ricordi quella sera che per gioco tu baciai? Sembrava solo un'avventura.
All right, we're here with Harry Donnelly for another awesome session at the Stablecoin Conference in Mexico City, powered by Bits Business. This is a theme today. I'm finding awesome people and bringing them into the podcast studio. So I did that with you here. Thanks for making time.
No problem.
Tell us a little bit about Circuit for those who haven't had a chance to get to know it before, and specifically how Circuit interacts with stablecoins as a core part of the business stack.
Yeah, will do. Thank you, Drew, for having me. And glad I bumped into you at the sandwich stand. Circuit is there to protect against the worst case scenarios in crypto. So to prevent catastrophic losses that would cause you to lose all of your funds. So either due to loss of access, if you would lose your private key, or your custodian fails, or your wallet provider goes down, or they go bankrupt, you would lose access to your funds or your customers' funds, and that'd be a massive problem. And Circuit prevents that from happening. We also are working on preventing loss of funds themselves. So if someone steals your credentials, steals your private key, is able to break into your wallets and is going to hack all the funds, again, business-ending event. And that's what Circuit is basically there to prevent. We want to stop these catastrophic losses from happening with the tech that we're building. And also we're connecting it and working with insurers in Lloyd's of London to make it easier and cheaper to get insurance if you're using our technology as well. So ultimately, we see one of the barriers to global adoption, to stablecoins and crypto in general, just being the catastrophic massive losses that happen all the time. And if you can stop that from happening, it makes it a lot easier for everyone to get involved in the space.
Yeah. Talk a little bit about I think when we first met around 6 months ago, we were early in our journey of starting the business. You guys were really strategically working with wallet providers, wallet infrastructure. Maybe let's start there of how would you work with a company? There are a lot of these companies even here. You got Turnkey, Privy, Utila, Defense. It's a really hot space. Is that still a top of mind, partnership go-to-market for you guys? And if so, how do you think about that?
Yeah. And also congrats on everything that's been happening. So
a lot's happened.
Yeah, it was amazing. I see you on LinkedIn. I'm like, yes, go Drew. It's great. Yes. So that was something which was kind of strategic on our side, ultimately, for us to be able to work with an end client. So let's say an end business who's offering stablecoins, we need to work with their wallet. We are embedding ourselves at the wallet level and embedding transaction-based security. So rather than having to rip up your entire flow and say, hey, you need something new, it's how can we meet you where you are? And how can we add to the security on top of what you already have to make it better without you having to rip everything up? And so that's been, I would say, hopefully successful. There's always more to come, but we have some very, very large partners in that space who are working with us, and we're starting to roll it out to their client base. And the conversations are moving towards, how can we make this a standard? How can we roll it out to everybody? Because ultimately it provides a lot of safety and security and guarantees that we otherwise couldn't get. So that's where we wanted to move towards, and we can start seeing those signs, which is fantastic.
Okay, cool.
Another thing that's been happening as well is, I mentioned insurance. We spent the last few months working in Lloyd's of London. So we were actually effectively incubated as part of Lloyd's lab to work with all the different insurers in London and to try and understand, what are people doing in crypto insurance right now? Why is it so expensive? Why can't people get it? And now I know much, much more about insurance than I expected to know.
Yeah, I don't know about this program. Explain what this is. It sounds really unique.
Yeah, it's really, really interesting. It's basically, you get almost like a Willy Wonka golden ticket. Speak to any insurer you want and they'll pick up the phone. So
say it again.
Lloyd's of London. Think of Lloyd's of London as if we go back to take the history, Lloyd's of London was a coffee shop in the 1600s where sailing ships would go and say, hey, I'm going to go on a voyage to India. I want my ship insured. And everyone would be hanging around the coffee shop and say, cool, I'll give you £5 of insurance or £10 of insurance. And then that's now turned today into this multi-billion-dollar institution, which all of the different insurers in London fit underneath. And so they're kind of the globally recognized name for insurance, and a lot of companies work with them and work under them. And so
for London, or they're sort of like a global
it's global
body.
So basically every single crypto exchange and every single crypto business, some bit of their insurance is probably going to come back to London. They'll work with their global reinsurers like the Munich Re's of the world. Insurance is still one of the hubs which London is a part of. So if you want to get insurance, London is still the center to go. And the reason is everyone is in basically 1 square mile of each other and can work and walk to each other's offices.
And you're Tom, I believe. Is he based there?
Tom is based there currently. Kieran is another person on our team who's based there. And we're now we have office space in their building, which is fantastic. In the Lloyd's building.
Oh, how convenient.
which is really good.
So they have it sounds like a program or something where they like
Exactly.
tell me about this program.
Yeah. So the program, they take in, I think, 10, 11 startups. I think it's on an annual basis, and they give you access to their resources, and they bring you in and say, we think this is potentially compelling and could be helpful for London in developing new products. And so we were the only crypto business which was brought in. And so they gave us the kind of benefit of the doubt. And we said, hey, crypto insurance should be huge. Ultimately, it's going to touch every business in the world. And unlike cyber insurance, which is also touching every business in the world, if you lose your crypto, all your money's gone. It's not like data. It's even worse. It's a bearer asset. And so we're going to need insurance for this, but right now it's really capped. There's very, very little available, and it's really, really expensive. And it's going to cost you 2 to 5% of your total assets every year to protect it in a hot wallet, which then a lot of people are like, why am I even doing this? Maybe I'll just bear the risk of it. And so we have to try and understand, why is that happening? Why is that the case? And part of the reason we realize is that, one, people don't understand it. Two, crypto insurance is very like hurricane insurance, which is like, if there's a terrible event, everything's going to be wiped out. So it can't really be cheap. It's not really like car insurance, where if you go over enough cars, you're only going to get small losses. There's going to be massive loss events, and so it's going to need to be expensive. But if you want to make it affordable, you need to prevent those loss events from happening. You need to prevent people from losing all their funds and losing all their money, either from a hack or from a disaster or bankruptcy. And that's where we saw the opportunity to apply the technology that we're building to this space. It's been successful, which is fantastic. We've been able to work with lots of different insurers. We've had some announcements already. There'll be another few announcements coming in the upcoming months, but we're starting to work with the biggest investors in the space, and they're recognizing that Circuit is really critical as part of the workflows that they need, and they're willing to give discounts to people who use it. So they will basically give lower rates because they see clients being a much, much better risk if Circuit is in place, because for them, it prevents them having to pay out claims. So that's been another big thing which we've been working on over the last few months. And those two things kind of come together, where we work with the wallets, we're working with the insurers, we're now starting to work with exchanges together and combine all those value props of prevent the losses, prevent the risks, save on the insurance, and slot in without having to do any uplift at all, because we've built that integration. And the master plan is ideally, hopefully, starting to come together.
I want to talk about the product technology here, because it's like this insurance focus. It's like the technology to actually do what you're talking about is so interesting and nuanced.
Okay.
How does it work? So, how does it detect, especially if there's like hacks, breaches, risk of loss? Like my understanding with Circuit is like, you can, like the term Circuit, it's like you can detect if something's going wrong, and you can, like a circuit breaker, like
pull the assets out.
Yeah, pull the assets out.
Exactly. So we've built technology which we call automatic asset extraction.
Automatic
AAE is how we're coining it. What it focuses on is not private key security, but on transaction level security. So it's kind of a new concept. Everyone's been very focused on private key. If you're a wallet, you're using NPC, you're sharding it, you're making sure it's protected. If you're doing backup and recovery, you're taking the private keys, you're putting them in a vault, you're protecting them that way. What we do doesn't touch that at all, which allows us to actually unlock new capabilities which you couldn't before. And what we do is we create and manage pre-signed transactions. So think of it like every time you want to do something in a blockchain, you have to sign a transaction, and then you send it off. And normally you sign it, you send it off, you don't think about it. Think about what we're doing is almost separating those two processes. We sign it, but we don't send it. And so because we've signed it, we can still use it at a later point in time. So we have a valid instruction. Think of it like a hard-coded message that'll say, I can move funds from point A to point B. If we try to change it, it's just not going to work. So all we have is the ability to move funds to a preset destination. But because we haven't yet sent it, we can send it later. And so at a high level, there's a lot of complexity of like how you manage it, how you make sure it works, how you do it across different chains. If something bad occurs, we can take instructions you've already approved and automatically send it off to move funds.
So if like point A isn't going to point B, it's going to point F.
Yes.
You're like, oh, wait, this isn't actually what we were expecting to happen.
Yeah.
And because, speak a little bit about, so like when I hear this, I'm like, oh, how are you pre-signing something, but not like in custody or not in control? Like, how do you think about that?
So we think about it from the kind of a messaging service, and we've spoken to lots of legal teams about it, where what is custody? Custody is the ability to kind of take control of the funds and move them at will as you want. What we have is we have a message that the user has approved, but it hasn't been sent yet. So all we can do is we can act on the user's behalf to send a message at a later date. It's almost as if you've stamped a letter, and then instead of going to the post office now, you're holding it and we'll bring it in a week's time. And so we don't never hold the assets themselves. All we hold is the instruction to move them. But because we're able to move them automatically, this unlocks so many different things, such as we talked about loss of access. So your wallet provider goes down. You're stuck. You can't sign a transaction because they're not available.
The user interface
is gone. Their server has disappeared. You're just like, what am I going to do? My customers' funds are trapped. We can still get those funds out because we've already signed it in advance. And so this unlocks this ability to always gain access to your funds and never have them trapped no matter what, even if the person who's holding those funds has disappeared. So it protects against bankruptcy, it protects against server downtime, but it means that you're never going to have your assets trapped in the worst case situations. And that's what's really exciting about it, because it unlocks these new things you couldn't before, but without having to give us custody or private keys.
So I love the stamp. I'm such a nut for like the metaphors, visuals. I'm wanting to send something through the mail and I have an address. There's a stamp that is needed. You're saying that like I walked to the mail service, and it's like you can detect if it's actually being sent or like in flight going to the wrong place, or if something is confiscated or happening, and that will trigger some sort of like asset recovery event.
Exactly. The way I like to think about it is like, if we use that analogy, imagine it's one of those old letters. It's like wax embossed and you have a specific seal. That's your private key. The seal, like imagine it's your ring, your big pinky ring, you're pressing it, and you know that no one else is going to be able to copy that because you're the only one with that ring. That's why they have so that's your,
so they know actually
exactly,
sent from you.
It's actually sent from you. So that's your private key. And if that's the only reason the people will accept it, because they know it's from you.
That's just so, like the world is so different.
No, but it's the exact same thing. It's the exact same thing, just in this way.
Imagine living in a society where like mail forgery of mail. It's like these people would have had to like constantly be changing their rings because it's like, I could just like totally replicate this high person of government's like
pressing it, and and this is like same with money printers.
It's like we're going to war, and it's like no, it was a fake letter.
It's a fake letter, and then they use like early encryption, like Caesar ciphers, and it would look like gobbledygook, but then you'd have to try and decipher it. And like, what crypto is just kind of like the futuristic version of that. Where
it's a messaging protocol.
It's a messaging protocol, which we've put encryption over, and we use our cool rings to now press it, and that's your private key. And so if you lose your cool ring, well, then you're not going to be able to send a letter because no one's going to accept it from you. But what we're doing is we've gotten you to press it ahead of time, and then we have the letter ready. So it means even if you've lost the ring, you can still send the instruction. So think of it like that. And then what we can do is either you have the red button. So if you say, hey, something bad has happened, I press the red button, I get all my funds out. Or else it can be, I automatically want to send it. So some signal like, hey, I'm looking at an endpoint and this has gone down, or this has occurred, or I've gotten this alert. We can then automatically send it for you without you having to bring people together. And in cryptos, attacks can happen super quickly in as little as 4 seconds. So you don't have time to coordinate a group of people to be able to organize them to sign out and move the funds. The funds will already be gone. And that's where Circuit is able to provide this automated response that you don't have to. You've set it up ahead of time, and we can't change the instruction, but we're able to still send it for you. So it unlocks the ability to automatically respond to these incidents, as well as protecting against any failures or downtime.
I got another one. So it's almost like armed security for a house. So you have like, ADT or Simply Safe, or these like, you can't like call police, like they can't call the police for me. But I can tell them, hey, if there's a door open or if a glass is broken, I will give you permission to call the police on my behalf. And you don't have to like ask me or get my approval. It's like, if someone breaks into my house, like, please feel free to call the police after 3 minutes. If like, you don't hear me, like, sometimes I forget to turn the alarm off. My wife like opens the door and like, oh, we didn't hear the alarm. Cancel. Don't. Police shouldn't come. But sometimes it's like, oh yeah, like I'm so happy that we set up, like we pre-signed to Simply Safe that we should have that security mechanism.
Exactly that. One of the analogies we use as well is like, imagine your wallet provider is a vault. They're a vault, and you keep your money inside it, and it's safe and protected because they build really good vaults. But imagine you just lose the key to the vault. You're stuck. Your money's in there. You can't get it out. Or imagine someone gets the key to the vault. They're able to open it, and then they're able to walk in the vault and take everything out. So what Circuit is doing is like, we're inside the vault, and we're able to think of it like almost like a trap door. So that if something bad happens, you can open the trap door and everything gets moved to a different vault. And that can happen as soon as someone walks in without you having to worry about it. So it's this kind of missing layer of protection that was there before, but slots in really, really well with the wallets because we don't take any custody of those keys or take any possession of them. And we just are strictly additive to their security that's already there.
You see wallet infrastructure, wallet providers, wallet as a service companies as a core customer for you guys? Or who are you actually selling this to? Who are you trying to convince to use or integrate this? How does that typically work? How much does that cost? Let's bring us into the go-to-market a little bit right now.
So the wallet providers we've been working with as partners, so we're working with their end clients. So imagine an exchange uses a wallet provider to protect all their customers' funds. The exchange would pay us directly. We would work with the wallet to make sure that it's integrated so that they could onboard to us easily. So to date, it's been wallets are partners that we work with. We work with them directly to work with their clients. We then will share revenue from those clients with them. So it's a win-win situation. So ultimately, we're an additional source of revenue or upsell opportunity for them because we're adding additional security to security-conscious customers, and we're able to do it without changing their existing platform. So that's how it's been working. It's been good. We're starting to roll out more widely. We're starting to see adoption from funds, from true custodians, from exchanges. I came down here to see if it made sense to speak to stablecoin providers as well, because we're not working with any. So if you know any or anyone's listening, please come speak to me.
What do you mean by stablecoin providers?
So,
issuers?
More stablecoin issuers, people who are using stablecoins to send payments. It's a slightly different kind of use case to, let's say, a fund. The fund is sitting on $200 million of assets and they're trying to protect it, versus if you are having assets move in and out all day, do you care as much about it? And so I'm not sure yet, because I'm trying to understand how do people care about it? Do their end customers care about it? A lot of the people here seem to be B2B2B. Do the merchants they work with care enough about the security? Do they have that level of sophistication? So that's why I'm here at the end of the day, to just do that discovery and understand in more detail.
Yeah. Do you see like custodial versus non-custodial wallet use cases mattering in terms of like, we were meeting with Decaf earlier today, the non-custodial wallet app. Like that's a very different use case than a custodial like exchange wallet provider like a BitGo or something. Like, are both good potential customers or like users of this type of infrastructure, or would you maybe like lean more into the non-custodial users, or kind of like more in control of the custody is more where you fit?
I think it depends on what the client wants ultimately. It's like, if you are risk and security conscious aware, this is something you see as a necessary component of the stack that you're building, and be that custodial or non-custodial. For us, we're agnostic to the type of wallet. So it can be an MPC, it can be HSM, it can be cold storage, it can be a hot wallet, which you have in your browser. We can connect to all of them, but it's really a case of where does it fit in and make sense from a business perspective. So we're trying to make it infrastructure agnostic, but focusing on the people who care enough about it, because those are the people who move the needle.
Does it really matter for you guys technically if it's Ethereum in a wallet or USDT?
Yeah.
Does it actually like technically change anything?
It does. And that's kind of one of the difficulties.
It does.
So that's one of the difficulties of building what we're building, is that each chain has a slightly different way of doing it. And we have to manage it. And when we talk about a pre-signed transaction, Drew, it's not just one. Because if it was one, it'd be pretty easy. But every time the balance changes, that pre-signed transaction is going to change.
It's a lot of envelope.
There's a lot of there's stamps in an envelope, and there's new envelopes coming all the time. So we've basically set up this kind of like, stamp creation and storage machine, which is monitoring and doing it across, think of each chain as a different post office. That, each post office is going to accept different stamps. And so, and each wallet provider is like a different like envelope. And so we're just combining all these things together to make sure it all works seamlessly. So from a user, you just see one interface and it's nice. I press the button, it works. But behind the scenes, we're managing all the complexity and making sure it's always working.
Yeah. We were just meeting with Jamal from Polygon Labs, and he's like talking about the vertical integration strategy of working with companies to go really deep within part of the stack of like working. Like I'm just even thinking about you right here. Like when you think about the different types of envelopes or stamps or whatever, like, does it make sense for you to go really deep with certain layer ones, or how are you approaching, because you can't do all of it at once. Like how are you approaching working with all of those different flavors? Do you come across, like, my mind goes to like the wormholes of the world, or these like interoperability companies? Like are these, how are you solving this problem is what I'm trying to ask.
It's not immediately obvious and easy. So the way that we kind of approach it is, one, what do our customers currently use? And making sure that we can support as much of that as possible. Two, what has the greatest overlap between customers that we already have and new customers that we're speaking to. 3, if we're looking at kind of the segment of institutions as a whole, what do they generally hold? How much coverage can we get by building the integrations for the least amount of chains? And so if you look at it, if you're able to cover Bitcoin, Ethereum, L2s, Solana, you probably covered about 95 to 98% of the assets they hold if you look at an aggregate group. So we've been kind of approaching it from the sense of let's try and get the biggest amount of coverage that we can to start with. And then based on what our clients are asking for, we'll then do this chain, do this chain, and do this chain, and be able to bring it all together. So once we built that kind of core, as mentioned, of those chains, that covers most of the use cases that we actually end up speaking to people about, because all stablecoins will generally be running on EVM chain. If you're doing Solana-based stuff, again, you can run all the different SLP, SPL tokens on that as well. That's how we're thinking about it.
Yeah. It's so many interesting angles to take here. Yeah. Do you think if you like speed the tape up, you guys just raised your seed round? Was it a seed?
Yeah.
Congrats on that. I'm trying to think through like speeding the tape up and where you guys are going to be in 5 or 10 years, how you think about, you have now capital to deploy, you're going to grow. Like, do you think in 10 years, you're just going to be like this kick-ass company based in London, like in the building of, this is just like a modern insurance technology firm, or like, what are people going to think about when they think about Circuit after this all works? Like 5, 10 years from now, this is all working. You're not going to be this like, this is me guessing. Like, I don't think you're going to be this like crypto security thing. It's going to just feel like, they're like the leader in like some traditional sense. Or do you disagree?
Well, I think it's that where's the world moving? So you have to like look at that first. And both of us are here because we think the world is moving in stablecoins, tokenization, crypto, new rails ultimately.
But the cohort in London was like, we're the one crypto company.
Yeah.
But like, I don't think the world is going to think that way.
No,
it's like no one says, oh, they're 9 internet companies and 1 crypto company. It's like, no, you're just ahead of the game with where the data technology is going. Sorry to cut you off.
I think it's exactly that. It's like internet, media. Internet became media. You didn't say, hey, I'm doing an internet media company. You say, hey, I'm doing a media company. It has to be on the internet. If you're doing a finance company, it has to be in blockchain in some way. Yes. Eventually, it's going to be connected to it. What we see for our company is that ultimately, given the nature of the space, security is so important, almost more so than traditional finance, because you can't roll things back. It's going to be effectively impossible to do so, and we're still losing billions of dollars every year. Like $3 billion has been lost this year to date due to hacks. And it's not going to be possible to run the entire global financial system on a ledger that keeps doing that again and again and again.
Especially as the pie grows, or the more the value of the hackable value goes up.
And so you're going to need to have every measure in place. And Circuit is less so a security company than like a risk company. So I view it as that any way that you can lose funds, we want to be connected to it and vertically integrated. And that goes from like building the technology, gathering the data, being able to work with the insurers, and connect everything together to make sure that the risk of you losing funds is infinitesimally small. But if it does happen, you're going to be covered with insurance no matter what. And so we're going to build technology to basically prevent all the edge cases and connect it all together, work with all the wallets, work with all the custodians, work with all the banks, embed ourselves ultimately as critical infrastructure that helps everybody and is additive, and that everybody will need and almost not even think about behind the scenes. And once we're able to do that, then we are able to understand really, really well where the gaps that lie. If we're working with everyone, where are the other gaps? So you build more technology, gather more data to be able to help issue more insurance around it. And then you rinse, repeat. So ultimately, you built this layer that's kind of indispensable for you to be able to do anything on, because without it, you're just at risk of loss. But because we've learned so much about all of these risks, we're the only ones who are able to plug the gap. And so that's kind of high level where we go. There's obviously more specifics, which happy to share off tape, but that's broadly how we think about it.
It's awesome. Well, thank you for the time. I'm excited for you to be in this room focused on stablecoins. I think as the pie grows, I think the market cap and the presence that stablecoins will have from a security and risk standpoint is going to only continue to grow. In the payments use cases where envelopes are being sent around, but they're not Ethereum or Solana, they're stablecoins. It's going to continue to be a huge deal. I'm thankful for folks like you in the space. Anytime I see like there have been this year, like you said, some pretty big hacks that have happened. And every time I see it, I'm like, wonder what, if anything, they were using on the back end like this. But yeah, man, thanks for the time.
No problem. Thank you so much. And agreed, you're doing the right stuff on the stablecoin side. I think bringing awareness to it, helps make more people able to make informed choices, because that's what people are trying to do. They're trying to make informed choices. They're trying to understand the space more clearly to get involved, because
a lot of people don't even know. They're just like,
oh,
I didn't even know like I could have integrated something like Circuit to make this worst case scenario. And I don't even have to be slightly awake at night because I've integrated Circuit.
That's it. I don't have to wake up in the middle of the night and press the buttons because it's all sorted.
Yeah, man. Awesome. Well, thanks for the work you're doing.
Thanks, man. Appreciate you too.
Ti ricordi quella sera che per gioco tu baciai? Sembrava solo un'avventura di palmare.